The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the November 25th terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. And I believe, folks, we should always be pioneers of our future versus prisoners of our past. Of course, the easiest way to do that is to remember that life happens for us, not to us. We make that small little shift, it makes all the difference in the world. And that means we can find the good in every set of circumstances that the universe throws at us. And it will throw circumstances to us. Hey, especially during the holidays out there. In fact, hopefully all of you, if you're out getting ready, preparing, you've been out to the grocery stores, you've got your Thanksgiving meals. Of course, many people wait. You can't really wait till the last minute if you're going to buy a frozen turkey out there. So be safe if you're traveling as well. And it's great to be with you. So thanks for joining us. This is Steve Rhodes. This is TFNN. It is Terrific Tuesday. Welcome to the show. Right now, we've got Dow Futures. They're trading up about 34 points, trading out at 17,826. S&P Futures up 3, trading at 2070.75. NASDAQ Futures up about 9 points, trading out at 42.91. Russell 2000 up 3 at about 11.88. King Dollar, up just slightly 9 pennies, trading out at 88.30. Not a ton of movement in the currency market, a little bit in the Aussie dollar out there. Goldilocks is flat. She's trading at 11.94.80. Silver is up 13 pennies, trading at 16.15. Light sweet crude is up 36 cents, trading at 76.14. Natural gas back 3 pennies, trading at 4.114. Let's take a quick peek. There is some markets that are moving out here. They're over in Europa. The DAX here is up a total of 111 points, a little over 1%. Let's go take a look at the DAX. Let's kick off our morning by seeing what's going on in Germany. The DAX here right now taking on its most recent swing point high. Of course, if you're watching us on TigerTV in full live HD, that's a beautiful thing. Of course, you may be watching us on TigerTV through your eSignal app, which is also very cool. Nice to be able to have Tiger TV as one of the windows that you can place inside of your screen. You can disconnect it. You can do the whole thing. Now, if we take a look at the DAX out here, we know we've got a swing point at September 19th. Our markets here, meaning the S&P, the Dow, the NASDAQ, all above their September 19th swing point. It's taken a while here for the DAX to get its act in gear. That swing point high, by the way, is 98.91. You're at 98.99. You close above 98.91. And, okay, where does the DAX go? It heads to that red horizontal line going across our screen out there. That's at a price point of about 10,042. That's the consolidation. Now, that's an important consolidation pattern to watch. The DAX, in essence, has been in a consolidation since October of 2013. So over a year, big consolidation. What we know about consolidations is that when they break the consolidation, they'll make a measured move. A measured move means it's equal to or greater than a consolidation. Now, there are times, such as back here in October, when the DAX broke through that consolidation, and it turned out to be a false breakout. How do we know it was a false breakout? Well, when you break a area of support or resistance, and that's really all consolidation is. On the bottom here, we identified an area of support for the DAX. Well, when you break a level of support, what typically happens, not always, but what typically happens, and what you like to see is you like to go see that level of support tested and then rejected. Then you know it's done with that party. It's done with that consolidation. Now it's ready to move down to its measured move, equal to or greater than the consolidation. In this case here, 1,067 points, give or take, right? Equal to or greater than. Well, what happened with the DAX is that as it came back for its test of that consolidation level, that was back on October 22nd. so a little over a month ago. But when it came back and tested that area, it really came back with some conviction. Now, I don't have volume on it, but I can tell you from a wide-ranging bar standpoint, there's a good-sized bar coming in there. Tested it the following session on October 24th, stayed inside there. Came back and tested October 27th and slightly got underneath it, but then on the very next session got back inside. In fact, we saw one more test back on October 30th, and then it was really off to the races out here. So pretty good chance with it being a light volume week out here, and I don't see anything at this stage here getting in the way. We'll go take a look at currency pairs, but at this stage, you would have to say that it's very likely that the DAX is going to go test that 10,042 level. You know, you break that, you got that potential of another 1,067 points inside the DAX. So we want to pay attention to that. The FTSE relatively flat here this morning. It's up 9.5 points, about 0.1% out here. The FTSE, though, is up above, just slightly above. It's 0.786 retracement level. That 0.786 retracement level, again, coming off of that little doji high on September 4th, down to the low on the 15th, 16th of October. So that says the FTSE ought to get up and test the 69.04 level. As long as she stays above 67.26, that is its message. We go over to Asia. Looks like the Nikkei was also closed again last night. So if we take a look at the Hang Seng off 49 points, not really that big of a deal out here inside of the Hang Seng, kind of like a sideways-ish type move out there, so no big deal there. If the Hang Seng can get above its swing point, its B point from November 17th, that'll set up a nice A to B equals CD to the upside. On Monday, a big move inside of the Hang Seng. Wide price spread, even though it looks like just a gap and a doji, was wide price spread out there. I'll assume it was accelerated volume, but no reason to assume. I can't tell you the truth. I can't tell you whether it was or wasn't. If we do take a look at the Shanghai, though, the Shanghai continued its move higher last night. Shanghai has broken through a trend line, I believe. I think this is a monthly trend line, if I'm not mistaken. Let me put the monthly chart back on my screen. Probably ought to label it. Yeah, if we take a look at the... Now, this is obviously, as we talked about yesterday, been, as far as a laggard is concerned compared to the U.S. market, well, she's been there. But what we can see here in the Shanghai is it's broken a trend. It's broken a trend that goes back to 2009. That was a descending trend out there, and it broke that the month here of September. Some additional follow-through in October, additional follow-through here in November, and it's got volume behind the move out here. So if we take a look at just kind of natural areas of horizontal resistance, I would have to pick out this swing point right here from November 1st, November 30th, 2010. That is a high of about 33.38. The low is 28.89. And we're not at the low yet, but that's its next target, which is 28.89. So the Shanghai looks pretty good from a trend breaking standpoint out there. If we go take a look at our futures markets, let's go do that. Let's look at all four of them, get a feel for what's going on. If we take a look at the Russell 2000 yesterday having a strong session, but has not been unusual over the past week. We've seen the Russell up 1%, down 1%. And yesterday here was one of those up 1% days. Now, what the Russell needs to do is get above, this is the futures contract, needs to get above 1190.50. That's really, you've got a couple of key reversal sessions out here. If I just expand this for you, just so you can see what you're dealing with. If you come back to the trading session of September the 3rd out here, inside the Russell futures, you've got a nice key reversal session. What do I mean? I mean that the price was extended. The current day, September 3rd, both the high and low of that day exceeded the high and low of the prior session. That just simply ticked lower. Did a little bit more than tick lower, but that's all that you need to do. That was a key reversal session. That became a level of resistance. If I put a line across there, we'll go ahead and we'll make it a red line. Let's draw a red line. We don't draw red lines too often. Let's try a red line in the sand out here, because you'll just be able to see exactly what that resistance line looks like out here. And we got red. There we go. Just doing that off the screen out here. In fact, let's change the number to red as well. There we go. That red line, 1187.90. Now, you're trading basically right at that level as we speak right now, give or take. But the Russell 2000 also, no, it was not a key reversal session out here. I take that back. It was on that trading session. It was not on November the 13th. Just simply a bearish engulfing, bear sash style candle out here. Nonetheless, that also marks resistance, the top of which is 1190.50. So you got 1190.50, 1187.90. For those of you that are in the Russell 2000, IWM, TZA, but whichever, maybe some other ETF out there, that's the numbers that you're really paying attention to. You get above the 11, we'll call it, well, let's use the 1190 number, 1190.50. What you ought to see is the Russell 2000 finally break through and move up to 1211.63 or so, right around there. That's what you would be looking at. That's the consolidation pattern inside of the Russell. That's similar to the consolidation pattern inside of the DAX. And so those are going to be two key levels for us to take a look at. Because in the case of the Russell 2000, it's about a 135-point move. You add 135 to 1211, you get very close to that 1350. 1350 is the actual measured move on its monthly chart for the last 11, 12, 13, 14, 15, 16 years out there. That's the price projection. That's the minimum price projection that the Russell 2000 has in store. We are inside the what's called the favorable seasonal cycle. I can go back. I can't remember who was it that came up with that seasonal cycle pattern out there. They did a special report on it. The name, this escapes me off the top of my head. Nonetheless, the November 1st through the April 29th level is your seasonal cycle. And our seasonal cycle typically does not top out in November. So, nor does it top out in December either during that time period. So, what we want to watch is what happens to see if the Russell 2000, I really think that's where we get our largest message in the markets. Now, of course, what you'd want to see the break of the consolidation. You'd want to see price go ahead and come back and test it, reject it, and then on its way out here. So at this stage here, it's still kind of a neutral position, in my opinion, inside the Russell 2000, even though it's the big mover here yesterday. We've seen those moves before. We've seen those down steps. If we take a look at the ES Mini, she continues to struggle at this 1.272 expansionary, which is 2,069. You're trading at 2,071. Is that bearish? Heck no. Not bearish at all. Just simply struggling. It's kind of like a pole vaulter, pole vaulter setting up this new height and, trying it, failing. But it could be the little engine that could. We see any kind of clear move above 2,069, then 2,139 becomes its next target. That is inside the S&P futures. If we go take a look at the Dow futures here, the little engine that could. That little engine that could is already above the 1.272 expansion, 17,689. That's the expansion of its swing points from September 19th down to the October 15th, 16 level. If we take a look at the expansion level, 18212, that's the number where the Dow is headed to, as long as it stays above 17,689. Now, yesterday, really kind of a flattish type session in the futures market, a little doji candle out there, or what looks like a little doji candle. So, if it trades lower today, well, then you start to see leaves falling off the tree. I'd have to say a key number today, probably 17,616. You get below that, then that says, okay, looks like we would see our first retracement in a while that would be coming at us. But until you see that, 18,212 has got to be the number that you would focus on and pay attention to inside of the Dow. Let's finish this off by taking a look at the NASDAQ. The NASDAQ above the 1.272 area. That says the NASDAQ wants to get up to 4387. You are at 4291. That is just shy of another 100 points to the north. If, in fact, and it's all about the NASDAQ, it is absolutely all about the NASDAQ. If the NASDAQ continues to motor higher, she or he or it or they will go ahead and pull the markets with them. This is Steve Rhodes. This is TFNN. It is Terrific Tuesday. Thanks so much for joining us, folks. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 38 right now. Gold, flat, silver up 16 penny. Pretty sad state of affairs. Last night, the riots going on in Missouri out there in what's the name of the city? How can that escape me here? Ferguson. Now, for me, it's kind of a sad state of affairs because, I went through the 67 riots. Now, 67 riots in Detroit, that is. And the 67 riots in Detroit kind of also referred to as the 12th Street riot. And it's a little bit personal. For me, it's personal because my grandfather was in the meatpacking business back then, and he had a store on 12th Street in Detroit. And I remember him taking me down there after the riots. It lasted for like 4 days, 4 days out there. Pretty horrible scene. National Guard troops, the whole thing that was out there. And when we got down to his building, was still standing. So I remember driving down there as a kid, seeing the building smoldering and so forth. And his building was standing. Now he was a good man. He was friends with all kinds of folks in that area, and somehow knew some folks that were in some of the gangs down there. Just not that he was a gang member or anything. Just he was a likable guy. Talked to everyone, and made friends with everyone. And his building was standing. Now at that stage, I thought that was a good thing. And the reality was everybody else around him was burnt out. How did his building stay standing? Somebody actually parked a motorcycle from a gang that was there. They knew not to touch that building. That was how that building stayed up there. The reality was what seemed like a good thing turned out to be the worst possible thing. Back to this day, if I could go back and relive that moment, I would have, as a kid, gone there and torched that building. Because you see, all the business moved out. He was the only one standing with basically nothing around him, and nobody else wanting to really go back down there. And so people started moving out of the city of Detroit, businesses, everything else along those lines. So fast forward to yesterday. Now, my father, when he was alive, he owned an office equipment company in St. Louis, Missouri. It was inside the city. Now, for those of you that don't know St. Louis, Ferguson is right next door to the city limits. In fact, his office equipment company is on Florissant Avenue, which is where all this stuff is taking place. And Ferguson's only about 2.5 miles, is my recollection, from where, at least the city limit, from where my dad's store was. Now, he's been long passed away, nearly 30 years or so. And, and to see the same kind of thing going on, can people not just learn? I mean, it's disgusting. Which I call them pigs, for folks that react. I don't really care what your angst is, what your thoughts are, but to actually go there and destroy somebody else's property, I mean, give me a break out there. I call them pigs because the riot in 60, 70 Detroit was referred to as the Blind Pig Riot. That was a bar that the police raided down there that kind of supposedly set things off. And, whether that was the case or not, what's so funny is in Ann Arbor, I didn't go to the University of Michigan, but I would go to Ann Arbor, during my college days. And actually, one of my best friends was in Eastern Michigan. We would just go, it's in Kalamazoo. Is it Kalamazoo? No, not Kalamazoo. In any event, we would go up to Ann Arbor, and the bar that we would hang out there is called the Blind Pig. I don't even know if the place is around there in any event. So, pretty sad state of affairs that human beings, and it's really our leaders, it's really our misleaders out there that, in the media. I mean, it's irritating. I don't know if it irritates you, and this is not about being on one side or the other. It's about just simply destroying property out there. And that's the way that people somehow are able to... anyways, let's get back to the markets out here. So much for reminiscing, but it does touch off, having been through that, seen that, understand the damage, understand what that does to, the folks out there. It's disgusting. Anyway, let's go take a look at some things here moving in the markets. Let's go take a look at what's moving in the pre-market here. We've got about a minute to do that. Seems like I pretty much wasted that segment. Tiffany here, the Blue Box Company. Hey, look, even though they had their net sales were up a bit, but just down 60% on the profit side. Now, I don't know if there's some unusual activity or something that took that out. Nonetheless, Tiffany here is trading out at 109.20. 109.20 is going to potentially take it above its high, which was a high volume high. So that was suggested that was going to be tested. That was August 27th, and that's at 105.66. That was a 52-week high at least. Let me take this back to a monthly chart. I need to get eSignal to tell me when these buttons are either 52-week high or all-time highs. Looks like all-time high out there. So you got Tiffany, the Blue Box Company, going into its best quarter out here, moving topside, going to take out a swing point. This is Steve Rhodes. This is TFNN. Right.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. us. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 27 points, straight out at 17,844. S&P up 3 at 2,072. Composite up 13 at 4,768. Russell 2,000 up about 3 points, straight out at 1189. We've got Signet Jewelers Limited. SIG is a ticker symbol, up 7% out here, even though the revenues were $1.18 billion. Oh, they really grew their top line. So Signet Jewelers, third quarter sales, $1.18 billion versus $771 million from the prior year. Yet, they were able to generate a third quarter loss of 2 cents a share versus a profit of 42 cents a share from the prior year third quarter. Jeez Louise. Anyway, that's your leader to the upside out here. Tiffany & Company also up 5%, up $5. Actavis, ACT is up $3.50, up 1%. Kihu 360, Technologies up 5%. Palo Alto Networks, PANW, up a couple of percent. DSW, the shoe company, I believe, up 6%. BioMarin Pharmaceuticals up a couple. iDream Sky Technology Technology up 11%, up $2. GoPro up $1.58. Michael Kors up $1.65. Dish Networks up $1.12. To the downside, Netflix leading the charge up $8. I think we looked at Netflix, and yes, I know we looked at Netflix and suggested that it might pull back into a breakout area, I believe. Workday off about 5%, down $4.68. CyberArk Software down 4%, off $1.80. Garmin, haven't looked at that forever, down 2%. Amgen off $1.20. Diego PLC up $1.20, off $1.20. Goldman Sachs down $1. Post Holdings down 86. So not a ton to the downside out here. Let's start taking a look at some of these equities here that are moving. Let's take a look at Signet Jewelers, get a feel for where this thing is headed to. So gapping up this morning, it's had a sign of strength back here on the trading session of August 28th. That price pulled back beyond where it broke out from. And that did that back here on October 14th. But this thing has taken off since those lows for sure. It's now gotten up to the B point. Was this B point taken out with volume? That was 922. Oh, most certainly was. In any event, right now what it's done here today, it's trading right at the 1 to 1.618 level. But this really could be a secondary A to B equals C. Let's go take a look at this one out here. The C point being our A point now. Come on, work for me. Come on, we're on live here. Work for me. Let me see if that actually worked. Did that work? There we go. There's your A point. Your B point out here, B, looks like right around the September 8th time frame, and your C point down around October 14th. So, yeah, there's a secondary A to B equals CD. Let me put this on a little bit longer term time frame out here. Let me put this on a weekly time frame. This could be its all-time high as well. So into new uncharted territory. Yeah, it looks like it is to me. So not a bad-looking stock chart out here. That's Signet Jewelers. It looks like a jewel of a stock chart. Let's take a look at Kihu 360. QIHU is the ticker symbol, up 6%. This is the weekly chart that's up on my screen here. This really has just been consolidating between the 63 to 74-ish area where it's trading at right now. Let me put this on a daily chart, see if this thing gapped up or what it's doing out here. Did gap up a bit. What it's trying to do, which could take out a B point to create a to B equals C to the upside. You'd go to the trading session. I'd go to the trading session of November 3rd. The high is 74.76, volume of 2.7 million shares. Yeah, it's got volume. It's already done 1.2 million shares today. So if, in fact, it takes out that B point, the A point's going to be your low on October 15th. Your B point, I think I'm using here, November the 3rd. Let's just see. Is that it? That high was 74.76 and 74. Yeah, that's it. So the B point is actually November 3rd, 2.7 million shares out there. Your C point down here from a couple of days ago on November 20th. Looks like this wants to head to 80.05, maybe 84, even Steven out here. In fact, if it can do that, its real supply line is all the way back here at the price level of $91.87 to $97.51. She's trading at $74 as we speak right now. That is on Kihu 360 Technology. Let me go back and take a look at Netflix here, NFLX. Let's just refresh ourselves and see what that is. Okay. Yeah, so we said Netflix was likely going to come down and test this low here from October 16th, the high volume low, the low of which is 331. We suggest that it could also find support right around the 344.38. So far, intra-session low is 345.09. You get below 344.38, pretty much sets up a test of that low of 331. In fact, you'd have to really say that is likely what Netflix is going to do. So continue to look for Netflix to move to the downside and test that high volume low. In the case of Workday, WDAY, that gap down this morning. They were out with numbers as well. Third quarter loss of $59 million versus $47 million from the prior year's quarter for the third quarter out there. And I know how to get that out. So this is gapping down. It's off its session lows so far, but nonetheless, this is moving lower. Got good volume behind it already, 1.2 million shares out here. Let me pull this back, see what shows up on our screen for us to focus on. You'd have to say that this thing looks like it may be trying to break just this little short-term trend out here. Let's put a trend line on it anyways, see if that will hold up as support or if it's already below it. That trend line that I'm looking at now, okay, so that's really In this case here, that's the trend. But let's go create this little channel line. Let's do that instead. Let's take a look at the. Let's probably use that for the channel. Use this for the channel out here. It shows up as a yellow line across my screen. So here's the when it comes to workday. That's probably it right there. There's your little rising price channel that price is traveling in. And with it gapping down this morning, again, off of its session lows for sure, but pretty good chance that it moves down into this area. This area, probably you're 79 to 80. You're at $87 right now. That is on work day. If it could hold that level, just kind of a slow, gradual move to the upside out there. No steep angle, that is for sure. WDA is the ticker symbol. Let's look at Garmin, GRMN. Haven't looked at Garmin in what seems like forever. Right now it's trading off about 3% down $1.68 out here. We take a look at it. It's a daily chart out here. Let me pull this back a bit. In the case of Garmin, it's got this level of support, very key level of support. If it could move down here, it might set up a buy. That price point, by the way, is around $49.86. So in the case of Garmin, had a nice sign of strength back here on February 19, 2014. 9.4 million shares the upside. Again, this is a gap. Gaps are your friends out there. You want to watch how gaps get tested. 9.4 million shares at the $49 mark. What does price do? Price pulls back and tests that area the first time on October 2nd. 5 million shares going against 9 million shares. So it's lightening up. It held as support. That level was tested the next day. 1.9 million shares. It was tested a few days later with 1.6 million shares. You kind of get a feel for how this window, this gap was. It's a friend out here, 49.46. If it does ever break below that, then the next area of support level number 2 would be 47.31. But right now we know 49.46 is a strong level of support for Garmin. GRMN is its ticker symbol. Hey, how about let's go have some chili this morning. Let's go take a look at Hormel Foods. I know that they produce more than just chili out there, but chili is the one product of theirs that I am familiar with. College kid, I had some Hormel chili. Of course, the way to really add some flavor, to chili in a can. I mean, come on. Well, when you're a kid, you got to do what you got to do. I say add some mustard. Some good yellow mustard, or maybe some hot mustard to it, some onions, and you're all set. Well, in the case of Hormel chili, right now, what it's doing, it gapping down this morning here, volume behind the move, about 130,000 shares. It's got a potential level of support here. Now the gap is not so wide. It's a sign of strength. Looks like this is probably where Hormel will move down to, which is back to the 48.31. To the, I'd have to say the 47.94 level. If it continues lower, if volume picks up to the downside, that's its last sign of strength. That is likely where Hormel Foods will head to. What else do we have moving out here? Let me see. Anything percentage-wise of any significance? Not really to the downside. To the upside out here, what do we have? We got DSKY, Dream Sky Technology. They were out with numbers. This is a Chinese company. They did in the RMB out there. They generated, what do they do here? A net loss of 79.1 million versus 12.9 RMB, Chinese yuan. And revenues were up 276% out there. So anyways, there you guys are having some trouble here in the being able to make money. Let's take a look, because this is an IPO back here from, looks like this came, I have daily chart we're looking at, August 7, 2014. Not a ton of data really for us to look at out here, so pretty, from a technical standpoint, pretty tough for me to give you anything that's of any real significance inside of iDream Sky Technology, DSKY. Oh, speaking of the DSs, let's go take a look at DSW. That was moving, was it not? It's not on my chart here. Seems to have fallen off, but let's go take a look at it anyways. DSW, see what it's actually doing. They were on the charts earlier. Maybe it's there, I just don't see it. It's off. It should be up there. In any event here, it's off its session high, but it did gap up here this morning. So this has had two signs of strength here recently. If we assume that today we'll have some decent volume behind it, 912,000 shares already today, going to versus yesterday's 2.7. Now this thing had a sign of strength out here back on August 26th, 8 million shares to the upside. I never did come back and test the bottom of the gap, which means the breakout area just traded with inside the gap out there, so no real signal as to why this thing maybe would take off. Now, what this has that is dangerous out here is this has got a high volume low from May 28th. That price point, by the way, is $23.45. And if things for DSW ever fall off the planet Earth here, that's where it would head to. That, again, is $23.45 out there. Excuse me, why I take a swig. Okay, you got gold is up about $2, silver up 22 pennies right now. Had a request here, I see an email coming in asking me to take a look at natural gas for... So I can't read the name, but I can see that it says, can I look at natural gas here? It's too far away. I got plenty of computers around here. That one's on my laptop. So if we take a look at natural gas off the nickel as we speak right now, if you're looking at natural gas, we look at the January contract here, what we can see is the following. Number one, we've got a swing point out here from November 20th, 157,000 contracts. That took out 101,000 contracts November the 10th. That should set up an A to B equals CD to the upside. We then have natural gas pull back with 179,000 contracts. So now it starts to pull back a bit with volumes. Now we've got kind of like two competing patterns out here. Yesterday we see a gap down. Where does natural gas gap down to? Well, it gaps down into a sign of strength. That sign of strength was November 17th. That's a little gap out there. That was basically, really what we'll call support level number 2. So as long as natural gas holds the 418 area, you're trading at 425. That just simply becomes a level of support, and that A to B equals CD to the upside should unfold. I would believe that is still the likely pattern that is in play out here inside that nat gas until you see a close below that 404-ish area. As long as you don't see a close below that, says natural gas should get back up to the $5 area. That's what I expect to see natural gas do at a minimum. Why? $5 will get you back to the highs back here in June. Natural gas has a seasonal pattern. That seasonal pattern, when you come off of the lows, as natural gas did, in this case here, it came off the lows back on October 28th. Normally, it comes off of the lows in September. So natural gas is now kind of, from a seasonal cycle standpoint, is shifted to the right out here. What natural gas has always done, well, I can't say always done, for the last 11 years, what it has done is when it's come off of the bottom, it's gone back and tested its previous June highs out there. That is your 1-to-1 A to B equals CD to the upside. If it can clear that 463 level again, I suspect that it will. And the early December top probably gets shifted forward a few weeks. Maybe it's all the way into the Christmas season. That is the pattern. And there's two opposing patterns really in play here for natural gas, the January contract as I see it at the moment. If we take a look at the commodities, let's go take a look at Goldilocks, see what she is doing out here. The real key inside of gold, by the way, we pointed this out yesterday. We'll probably point it out tomorrow, too, unless it takes it out. Well, especially if it takes it out, we'll point it out. Excuse me, that's 1207. 1207.80 to be exact. That's your 0.618 retracement of its last set of swing points to the downside. 0.618 is a natural area for people to get off of the elevator, especially if they got into gold down in the 1130-ish type range out here. Got a decent, $50 move, $60 move, $70 move inside of gold, depending on what you were playing. Now, if you get above that 1207, that says that price starts to then move up to the 0.786 area. What's that number? Good question. I need to go tell you what that number is. I need to punch that back up on my screen out here. 0.786. It shows up as a white line. 1228. You get above 1228, all of a sudden gold starts running into its trend line. Now, it's a trend line. It's a short-term trend line, but it's a good trend line nonetheless. That's a trend line coming off of the high here from July 10th. That trend line, you can use the high out here on August 8th. Happens to coincide with August 14th as well. So gold, in order to really prove itself, needs to clear 1207. That's its high hurdle. This is Steve Rhodes. This is TFNN.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's flat. It's off 50 cents right now. S&P is up 50 cents. Composite, the lead, the dog out here, she's up 9 points. Let me just check in on the NYSE, see what's cooking out there. New York Stock Exchange, wider swath. Not too bad still. 632 net advancing issues out here. Price-wise, no big deal. New York Stock Exchange up pretty much flat, up 6 points out here, but still some strength underneath the covers. If we take a look at some of the mining equities here that are moving, let's take a look at Rand Gold. GOLD is the ticker symbol, up 43 cents right now. We know about Rand Gold, much like we were taking a look at gold itself. Now, gold is up towards the 0.618 retracement. In the case, now, of course, I'm using a different set of swing points here for Rand Gold. But if we take a look at what it is doing, it's just really struggling to one of its Fibonacci levels. That's the level from the July 10th high down to the low that was put in on October 31st out there. So as soon as Rand Gold can get above its 70.18 level, 70.72 looks like a new daily market profile resistance level. You get above that, 77.71 is in the cards. You can see nicely making higher highs, higher lows out here. So Rand Gold looks pretty good. Gold Corp still struggling to get above resistance. That's the one that each of us want to be paying attention to. Oops, I've got to get the right symbol out here. Come on, switch over. Do that for me. There we go. Now we got Gold Corp up here. And that resistance level again being 21.42. 21.42, that gets cleared by Gold Corp, especially if you can do it with some accelerated volume. Maybe it does it on Friday. Right, the markets are closed on Friday. Well, I'm sorry, the markets are open on Friday. Will be closed on Friday. Many people will not really be paying much attention. Sometimes some of the better trade setups can actually occur on the Friday after Thanksgiving. So you want to pay attention. And pay attention, I would say pay attention to something like Gold Corp. You know, question is, what's kind of trying to sneak out the back door while nobody is looking out here? You know, if by any chance, you know, you get the currency markets are going to be open. The European markets are going to be open. The Asian markets are going to be open. So we got trading that's going on. So you want to pay attention. Of course, Gold Corp won't. So you got to really be watching what's going on with gold itself, right? Gold or silver commodities, I believe they'll still be trading out there. But when you come back on Monday, let's assume that doesn't happen between now and then, meaning tomorrow. You want... Well, no, I'm sorry. What am I talking about? The markets are open on Friday. So Gold Corp could do that. Hello? So if you were to see Gold Corp get above 21.42, it would be a pretty good indication that you want to jump all over that GDX-type trade out there. Because with Gold Corp being the primary and 13% holding with inside of that structure, up until then, you're not going to see a ton of movement inside of that ETF out there. Yeah, stay away from that eggnog. That's exactly right. I need some eggnog. I'm tired. I'm looking forward to a few days rest out here. In fact, put so much time and energy into that workshop. The 7-week trading course. By the way, folks, got a number of emails, and yes, it is not too late to sign up for that workshop. We just got the archive of that on your members page. You're not going to miss out on anything. Remember, ask especially while you're sitting around the afternoon table, dinner table, whatever it is that you're going to eat your Thanksgiving meal out there, and somebody asks you, hey, what kind of gift? Give the gift that keeps on giving. Send them over to the homepage at TFNN.com. Have them sign you up for that workshop. Then you can get in on it right there. They can buy that present. They can give you the gift card. But do that. Give them the gift of knowledge, the gift of your knowledge, and I'll give you the gift of my knowledge as well. Well, folks, it is the end of our trading hour. This is Steve Rhodes. It's TFNN. Thanks so much for joining us. Stay tuned. The second hour of the Trader's Edge will be up next. If you're off to start your day, have a great day. Travel safe. Look forward to seeing you soon. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.